This is not going to be useless class, so again, I'll just drop in a few, what's the word I want to say here? A few clumps of knowledge here. I see Leopard's in here. What's up, Leopard? So the first thing, so can everyone go to trading chat and go to the message I sent at 6:55 Eastern Time. I said, so interesting study here. I took this long Friday afternoon. And then go to the message I respond to. Okay, so click the message I respond to. Does everyone see this? Does everyone see this right here? Make sure you see this. Okay, I responded to a little bit ago. You can click that message. So I'm going to be talking about that real quick. So, can everyone see it? Type 1 if you can see it in chat. Alright. Hopefully you guys see it. So, the first thing I want to point out with that setup is, what is the first thing you should notice when I go on the 1 hour time frame here? What's a very obvious buy side and why? Yeah, so obviously these equal highs is the obvious answer. And okay, this is the obvious answer. And the first thing is, I'm going to be using this with the inversion. So I always say this. So do you have to catch this inversion live time? Like, do you have to market buy this? No, you do not. Okay, you don't have to market buy this inversion. And a lot of people think, oh, I missed this setup. We're way too far in premium. I'm not long anymore. Okay, but that's fine. Okay, like someone DM'd me the other day. Why do you still long on premium? Why do you store a discount? It's because I still know where the draw is. So when we see this, right? We see this inversion work in hindsight, and let's say maybe I didn't long it. What do? I go to the lower time frame and I look for another setup. I know we're way in premium, okay? But now I look for like smaller time frame liquidity purges, and I look for a smaller time frame like premium discount, okay? So you don't always have to have premium discount from like the most giant range, because if you miss this, that basically means you're saying you can't long up here. But I think I still long up here if I see the 2022 model, especially if the draw on liquidity is this obvious, right? How many times have you seen equal highs or equal lows, and we're like 15 points from hitting them on a queue, and we go and hit them? Like, that's a free 15 points, okay? And that's what I'm trying to teach people. Like, that's a free 15 points. You got to realize. So the first thing I want you to notice is if you go on the 5 minute, we had equal lows here, okay? So my exact thought process when I see this is okay, right here, you can see in my Discord, I actually alerted this short in live stream. So, give me 1 second. So if you look at the 15 minute right here, I saw we were kind of violating this. Okay, I knew we had buy set above here, but oftentimes we go back to the 50% of the range before hitting buy set sometimes. So we went back to 50% of the range. We had equal lows here. So when we are kind of right here, if I go back in time, right here, did I really know whether we're going to bounce or not? No. Okay, but then if we play like a candle on like the 5 minute, okay. Oh my God, I just didn't mean to do that. If we play candle on the 5 minute, I was like, we're kind of violating this a lot. It's turning into an inverse. We don't have a close under it yet. Okay, we never close under it. But we have these really nice equal lows below, buy set above. So this is where, okay, we're weighing the premium. I think we're going to go for these equal lows and then maybe bounce. Did I know we were going to bounce? No, I did not. Okay, and this is a good lesson I'll teach you in a second. And you can see like right here, I said, I think we go to these lows now. And I ended up alerting a short when I said that. Okay, and I said, I think we go to these lows right here. So we still had 1504. We still had 20 more points and we hit the low. So Do you see how, like, when we start getting momentum towards an obvious draw, like, you can still find a short setup, okay, even though we're still kind of low. Like, this was perfect right here, right? We created a fair value gap. We had a clear draw, right? That was perfect, okay? And I think I alerted the short. I think it was on this candle right here. So you can see this was it was achievement of fair value gap as well. So like, this is an example where we still buy side above. You kind of see us violate that 15-minute fair value gap. We don't really respect it. And if we were truly going to buy side, right, what you want to see off this is just a really quick reaction. And when you don't really see those quick reactions with obvious buy side above in like 5 minutes or less, especially on a 5-minute time frame, and we've equal lows below, usually these are used to accelerate price. So price accelerates back through here, and we just jump right down to the liquidity, because there's so many orders that get reversed in here. We just kind of dump through it and everyone's liquidated. And then right here, here's what I want. Here's a good lesson right here. Where did I put my stop loss for the 20-point short setups? My stop was if we started to violate this fair value gap, and we did not. Right. So my stop was really if we violated this, but we never did. So that's that. And then here's like another good lesson. So if we look at this, okay, are we blindly longing this? Is my strategy, blindly long this, turtle soup it, blah, blah. No, I do not do that. So I noticed we were in a fair value gap at the time. Like you can obviously see we went into an hourly fair value gap. And knowing we buy side above, some people will generally blindly long this, okay? So it is not my strategy. My ICT strategy to keep a high win rate for me is not blindly longing this. What's the problem with taking a blind long under here? What do you think? Why do you think I don't like that? Yeah, there's not really a good stop. There's like no stop here. The zone's just gigantic. You don't know how far it's going to pull back. So, exactly. So, that's why I don't typically like to just take a giant long inside this, because truthfully, I don't really know exactly where we're going to bounce into this. So, that comes to hindsight. What you want to see here is maybe you will not catch in a live time, but after the reaction in hindsight, okay, you'll see this in hindsight. When you see this in hindsight and you did not long this, what is this? 2 candles in hindsight. What is this telling you in hindsight? Yeah, displacement. But what does this displacement really mean in hindsight? Even if you didn't long this. Yeah, exactly. It wants to sweep the opposite liquidity. So even though I didn't long this, and I actually almost did long this, I was really debating and I just didn't. This is probably one of the most obvious turtle soups we'll get in the next couple of weeks. But in hindsight, after you see these 2 candles, especially after like this is inverse right here. See this inverse right here? Right. Do we have any other bearish fair value gap right here? Nope. The only fair value gaps we have that are bearish are right here, and we inverse both of them. So in hindsight, when you see something like this, you really, ideally, you know now that if you long this, it should bring us up to here. So anyone who turtle soup this, where's their limit order? Their limit's going to be up there. So basically, even in hindsight, you could still jump on the train because you still know this has to be the draw, especially after this reaction. Okay? So now when we get this 5-minute, it's just you go to the lower time frame, you do what I love to do the best, and you just look for a lower time frame setup. Okay? So in hindsight, we now see, okay, we bounce in hindsight. I did not clutch any of this move. I did not long any of this move. But I know now we're going to go, so now I just look for like another setup. Okay? And this is where I look for like a bearish fair value gap to turn bullish. Okay? So like something like this. Okay? Or I look for like a 5-minute fair value gap, or like some sort of inducement here. So I think the big thing here is you can see this inverse was never tested. Okay, it was an inverse. There's a low that was put in right here above the inverse. So this is where, okay, you have a good feeling we're not going to go under here. Okay, like this is a situation where the stop is kind of big, but like if you're right, we will 100% not go under there. And this is a situation where you know we've equal highs above, you know we displaced, we should not go under this no matter what. So this is where it's up to you as a trader what you want to do. Some traders will just long this, put their stop here, target here. This is almost a 2R. This is 1.88R. Okay. So some traders are like this. Okay, which typically this is not my trade style. Okay, my trade style is I'll see this, I'll see what else react, and then I'll go to like the 1 minute and I'll look for like a bearish fair value gap or something like that to be broken. So like, see how in the 1 minute right here, so see how we're reacting with this. See how there's a bearish fair value gap here and bearish fair value gap here. So what I do now is I'm like, okay, there's two of them. I'm gonna go to the higher time frame, maybe like 3 minutes, see if there's one. And indeed there is one. And now I just look for the trigger. I see low resistance liquidity. Right, it's not clean, but you can see it doesn't have to be clean. You can see there's high here, high here, high here, 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 here. So we have low resistance liquidity. We have our bearish fair value gap. We want it to be broken. We have equal highs above. This is where you just wait for this to be violated. And some traders will already be longing this. Okay, the reason I do not long this is because there's just so like you really don't know if we're gonna go here. You don't know if we're gonna go here. You don't know how big, like how far down we're gonna trace. Okay, this is literally a 40-point stop. Like I don't know a lot of traders who like a 40-point stop. You know, even with a single micro, I don't know if that's a $80 stop loss. So I know some people risk like $100, $200, so that's fine for them. But people like playing at personal accounts, I don't know if they're gonna want to risk $80, right? Especially this high in premium. So this trade right here, I typically do not blindly long this. I wait for the inverse. I wait for the bullish fair value gap or the bearish fair value to be broken. So if we go here, boom, there's my entry right here. And the second we inverse this, I'm longing this retracement. And this is where it all comes back to that trade that I said to check in trading chat. Okay, this is the trade I said to study. And you can see, right, you can see I was in that trade, okay? And I posted it, and the take profit did not hit yet. And if I'm right, that take profit should hit on Friday. But the fact that it did not hit on Friday, okay, means there's probably just not enough volume. When do we get new volume? Sunday open. So you can see like here's a new setup. Your stop is under here. We should not go under here if we're right. Right, and then not sure what that is. And then there's your entry, and then just look what happens. It just nothing happens. But do you see why? Like, you see how the market closes? This is 418, and we kind of consolidate here. And see how we don't really go anywhere, and we still have the equal highs above, and we still kind of broke the low resistance liquidity. This is how like you know we're gonna gap up on Sunday, because this setup is still a live setup. It just didn't play out on Friday afternoon. So like that's how I kind of knew we were gonna gap up on Friday. And I posted in chat earlier. You can see like right at open, 6:11 p.m. I predicted this. I was like, come on, market gods, because this. I took a SPX call on Friday, but yeah, that's how I kind of knew we were gonna go right up at open, because this setup was still playing out, right? If I did not, like, imagine you have this risk reward thing in your chart, and this should hit. Like a lot of these SMC traders, they have these wild price targets, like just in the middle of nowhere, that do not have to hit. But like my price targets that I put, they have to hit. That's the difference between like ICT and SMC traders. So when you see an ICT trader and their target hasn't hit, the chances that their buy side is correct and they're a decent trader is pretty spot on. So like if I post a trade like this and my price target is still not hit, you still know where price should generally want to go, because I'm not just putting a random price target in the middle of nowhere like an SMC trader. I'm putting where price should go. Okay, so you can see just in this is a perfect example. We got the inverse, right? We had the low resistance liquidity. Whenever I look for equal highs or just buy side in general to be hit, what do I look for? I look for the bearish fair value gap, and then I look for it to be inverse, right? Because when we had this gigantic red candle, right, when you want to just see it inverse, right, to just blow this candle out of the water and tell you, okay, the market just filled this inefficiency, it wants to go the other way, this inefficiency doesn't matter. So yeah, so if you're in trading chat and you're paying attention Friday afternoon, that's the setup that just played out tonight, and it was pretty clean. I predicted it nicely. Asia Sunday night opens are not bad. I will trade them sometimes. Just Monday, Tuesday, Thursday, Wednesday opens, I will not like to trade. But I'm not going to lie, Asia Sunday night opens, if there's a clear draw, they can be very nice to trade sometimes. And this is just a perfect example of that, because using my inverse, right? You see this reaction. Maybe you don't long this, right? Maybe you're not longing this. But once you see that reaction, you just kind of look for a second confirmation setup, whether it be an inverse or not. You can kind of see it comes right here. And what's so iconic? Why do I like this? Why do I like this the best? Like, why is it this fair value gap I'm pointing out? I need multiple answers here, please. Like, why am I not pointing out, like, oh, this bullish fair value gap? Like, why do I care more about, like, this? Yeah, exactly. So, it's the only fair value gap, and I see most of my premium members are getting it because they watch me live stream every single day, and I keep saying this over and over again. If you do not watch my streams every day, basically the answer is because it's the only one, right? It's a lot more easier to use inverses when there's only one of them. Imagine if there's like 5. How do you know which one to use, right? Even sometimes if there's 5, I don't know which one to use. So you can see right here, there's only one of them. It just makes it the most simple to use. And if there are multiple of them, I just go to the little higher time frame just to see if I can kind of narrow it down to one. So, yeah. So do you guys understand, like, how even though I don't catch some of this plays in live time, like I didn't catch this long in live time, I didn't catch this long in live time, do you see kind of how I hop on the long with my model after a few other models play out? Does everyone understand how I do that? I mean, the people with green names should understand because they see me do it every day, and I literally alert these trades. But this is mainly for people who do not join my streams or do not watch them on YouTube. Kind of. Okay. Yeah, just, again, look for the first setup to play out and try to enter like a second setup, because generally if the first setup kind of reacts nicely, right, if you see another setup in lower time frame, the chances of it works after the first setup works and we still have not hit like the liquidity target, the second setup should generally still play out. Okay, so it's like this is almost a little more risk, and this is almost like a safer play because you see this react, telling you what? Telling you we have to deliver to the equal highs. And then the market is just nice enough to give us a second setup after we already know we should hit these equal highs. So if we know based off this candle we should hit the equal highs, well then any long setup should be valid still. And it really ups my win rate, and that's how I kind of maintain a high win rate. A little more, so I'm going to do a little more inverse stuff. There's a couple other nice textbook inverses. I think another interesting study is this. So I called buy side very early morning. when I woke up. Okay, I kind of see how there's two inverses right here. It does make it a little more complicated, but this inverse was violated pretty nicely. And I think this is a key signature in price you guys should remember. Okay, this kind of just slow movement and then just giant move down, because a lot of times these do end up getting filled most of the time. When you see like this consolidation and slow price movement and then a quick move in one direction, usually they end up getting filled. Okay, I will still look for kind of a short setup if I get it, but when I woke up, like the reason why I don't trade overnight is this. If I'm waiting overnight here for a short, that's gonna just make me wait for a while. But if I wake up in the morning, I'm waking up to like 10 new hourly candles, right? So I'd rather wake up to 10 new hourly candles and see if there's anything obvious or see anything else that I like, instead of like setting alerts all night, watching in live time. Because if you wake up to 10 new candles, that's kind of giving you like a fresh start, okay? And that fresh start is nice to trade because you're kind of like, okay, we're in a different situation than yesterday. Let me figure out what I'm going to do. So there's two inverses here. When I woke up on Friday, I woke up around 8. I saw we were in this one. And if you notice in this one, there's almost no pullbacks. And that really tells me this is not a good fair value gap to short, because when you don't get really no pullbacks, not even for counter trend scalps, that's like this isn't even here. So if the market doesn't even think this is here and we have equal highs above, do you really think the same thing's going to happen with this? Probably, right? Because we have equal highs above. We've already inversed this one with almost no pullbacks. No pullbacks is the key here. If we got pullbacks, that means we would have gotten more speed bumps saying, okay, there are sellers trying to come in. There are algorithms trying to short right now, right? But the fact that we didn't even get any pullbacks in here tells me, okay, we've kind of squeezed through this, no pullbacks. What makes you think the market's just going to stop in this one and not go to the equal high? So that was kind of my thinking when I woke up, and it was nice because I like waking up to the 69 minutes, just kind of a joke, but I like waking up to new fresh candles. So this one, when I woke up, I was like, okay, this is getting inverse, no pullbacks. And then again, you just go to the 5-minute time frame, look for some sort of bearish fair rally gap, and look for that to be broken, okay? And you can see like right here, this was actually in London session. I was not awake for this. So I always talk about where we're delivering from. Okay, so see like in this situation, hopefully, am I going too fast? Hopefully I'm not going too fast. So in this situation, again, we know EV highs above. Not everyone is going to slap this long. Okay, what do? I do not long this. Okay, what do? I wait to see the reaction. Once I see the reaction, I now go to the lower time frame and be like, I see us reacting off this 15-minute fair rally gap. Okay, now what do I look for? I look for a bearish fair rally gap right here, and I look to see, do we close above the bearish fair rally gap when we are delivering from a bullish fair rally gap. And the second I see that, that means my inverse model is activated. Right? So we know there's equal highs above. And really at this point, okay, at this point right here, I don't really know how high we're going up. All I know is at this point, we should at least rebalance to this fair rally gap. So the market does two things: go to buy side and sell side, and goes to inefficiency from inefficiency. So like when I'm longing this, I don't really know if the market's going to go up here. I at least know it's going to go up here. And if I at least know it's going to go up here, well, that still allows me to get a good trade and then maybe leave runners, maybe look for a new trade up here, right? You don't have to know the market's going to equal highs every time, like hours and hours before. But you do want to figure out maybe targets before potentially the equal high, so we could reject just in case. So like in this situation, you don't really know if we're going to the equal highs until you kind of see the reaction up here. But at least you know, okay, there is an unfilled imbalance up here. We inverse this, right? You kind of see, oh, this didn't even matter when we hit it. Okay, you see us delivering from a 15-minute fair value gap. So like in this situation, you're still long, targeting premium, and then you kind of, okay, scale some, see how we react, and react live times whatever you see. Okay, but this one, we are delivering from 15-minute fair value gap. When I see that, I look for a bearish fair value gap, right, which is right here, and then I just look for that to be inversed again, and you can see we close over. This candle right here closed over. So once this candle closes over, this is a valid inverse. And what's your stop loss for an inverse fair value gap? What's your stop loss for this? Yeah, so close back below is the stop loss. Okay, we never got to close back below. You can kind of see this wick goes under barely, but again, that's not your stop loss. The stop loss is if we kind of close below it. So again, do you guys see how I use these inverses? How I kind of look for like the opposite fair value gap with a bias, and then I look for the opposite fair value gap to be broken. Does that make sense to you guys? And you can see my awesome friend Leopard took that trade. So everyone look at chat. See the trade Leopard took? So he used it. He used it perfectly. I've taught Leopard how to use this. He literally used it exactly how I teach. So 15-minute order blocks. Using inverse order blocks is a whole different strategy. There's a lot more rules with that. Yes, generally you want a green candle closing back above. And if this was the hourly time frame, I'm not blindly longing this, but because it's the 5-minute time frame and this isn't a huge zone, I'll long this. Oh yes. So like let's say this is a 15-minute order block and then you got a lower time frame inverse fair value gap, it would work perfectly. So yes, you can use this with like hourly or 15-minute order blocks too. Did you get my question, Young Hu? Yes, Metzi, you posted that. So everyone look at Metzi's. Metzi's, was that the 1 minute? So this is an execution from tonight, I think. So right here, see how this is a singular 1 minute fair value gap at the bearish fair value gap? We had low resistance liquidity above. Right, see how we have a nice candle close above it. It's the only one there. And then you long the retest, right? You don't even have to wait. See how this fair value gap never gets retested? If this is an inverse, it's not always going to be retested. Okay, so see how we don't even return to it? It's because we inverse this. So this is the long, not even this. So you can see Metzi's entry was a perfect example as well. You can see the executions. Just really nice example of this. This just show it, like Metzi is another person in my Discord, right? I'm not just saying this stuff and pointing this out in hindsight. You can see people taking these trades before they happened. So Leopard and Metzi just show two great examples of the trades I'm talking about. So even the black candle close above. Yeah, a black candle close above does not matter. It has to be green candle close above. See it? Look. This is an open, not a close. Remember that. Like this is an open of the candle. This is not a close of a candle because it's a red candle. So always enter off the fair value gap inside the inverse fair value gap and just don't enter off the inverse alone. I think you're gonna get a high probability, more high probability play if you do that, Kevin. But do you see how here? Do you see right here? Do you see how we inverse this, right? And then we retest it, but we never actually enter the fair value gap inside the inverse. This is where it's kind of gonna become your rules whether you want to wait for this or not, because sometimes this will not hit. It will be better. It's always a better probability inverse if another fair value gap to the opposite way forms on top of it, like this right here. Okay. If this fair value gap doesn't form here, this could have still worked, but it's always higher probability if there's another fair value gap that goes in the opposite direction of the inverse. So right here, I'm actually looking for shorts here. See how we inverse this and we hit buy side? So my guess is this is what I'm kind of looking for. I want, like, market, we know the market moves from inefficiency to inefficiency. This was not hit. So what would I be doing? I'd be looking for a short setup right here. And this honestly might be it, but it's Sunday night and we already got the opening volume, so the volume's just going to probably dry off here. But I want us to reject here and at least hit this, and then I want us to blow through this and maybe hit this. So, and this is, how am I saying this? This is all because we violated this 15-minute inverse right here. Right, so now you just get a lower time frame, you look for a setup. Let's see if I can find like an example on this. So UD here's an example of, you get a bunch of consolidation and then just a random giant candle down, and see how this ends up just getting filled. This is a very key signature in price you always want to remember. So, like, this is a signature in price you have to remember. Let's see if I can find an example of this. Not really seen a lot. I think it's, I notice a lot, inverses are kind of easier to use on the indexes for sure. There's a lot more fair value gaps to play with. Oh, here's another example. Bunch of consolidation, random move downward, giant fair value. This isn't any fair value gap. This is like almost a void, and it just ends up getting filled right away. This is a very key signature in price you want to look for. This is one of those setups where, see how this ends up becoming inverse? When you see this, you should already expect it to be inverse before we inverse it. Like, because it's we get consolidation, quick move down. These quick moves down, these retracements will not hold. Like, you will just end up filling this whole thing. So this is just another kind of signature in price you want to look for. Consolidation, quick move down, and then you try to find a long at the bottom, and we generally, before you know it's going to become inverse, we just fill the whole thing typically. Here's a nice example right here. So, like, see how right here we delivered, we're bouncing off a 5-minute order block or 15-minute order block, and let's say you're off your computer and you missed this, right? Let's say you missed this long. Well, you're like, okay, I see a bearish fair value gap. I'm going to long it if we inverse it, right? And we'll look for like another high to go to maybe. So, like, what do you see here? Consolidation, random quick violet move down, and we always end up filling it. So like you look to the left, look for a high, something like this, okay, and then you can see there's another very nice example right here. And it depends on you. Like some people, they put their entries right at the beginning. Some people do the 50%. I typically do it about the 75% area. I don't enter right when we enter the inverse because you can often get a better reward and we still hit your entry if you do 75%. Sometimes you won't go the full 50. And then with your stop loss is just kind of a close below. So you don't really know the stop loss, whether it be here or here, until it happens. But what you try to do is you try to guesstimate. So I just put my stop, like, I'll look for a low under the inverse. Because generally, if it's going to work, we won't hit that low anyways, and we won't close under. And again, what's so good about this one? What's so good about this inverse? Yeah, exactly. It's only one, singular inverse, right? So it's easy. It doesn't make anything complicated, okay? So I see Johnny Cash is in here. So this is the other thing I wanted to bring up. Okay, so actually, so this is actually, see, this is a good example of an inverse I wouldn't take. So here's an inverse. We're blowing above it right now, okay? We took sell side. Well, we took internal sell side. We didn't take any major sell side. We did not fill this inefficiency. But here's an inverse that would be 250-50 because all we're doing right now is we hit buy side here in the higher time frame, like we hit this 4-hour equal highs. So we're kind of in between. We're gonna be, so I'm gonna kind of draw this for slippage. So this is gonna be like a PD array clump instead of a singular inverse. And I've lately been using this term because you'll often see PD array clumps, this and this combined, or a PD array, and on some could be the 16-minute time frame, could be the 18-minute time frame. You don't really know. Could be the 19 and a half. But this is a PD array clump. Okay. There's a volume imbalance here, inverse volume balance, inverse here, and now there's an inverse to the upside here. So this is kind of like a 50-50 scenario for me. These are the inverses I will not trade. These are the ones where I notice people lose the most. They'll be like, oh, dodgy, I shorted this. Why didn't it work? Well, you got to realize this got inverse too. So this is just like if we were in between two normal fair value gaps. So it's still 50-50. The only time I'll ever take 50-50 setups is if I'm very extremely confident I know where the draw liquidity is. Okay? If I'm extremely confident, I'll slap them all the time. But like even right here, okay, if we go back to right here, why didn't I slap this long on Friday even though I knew there's equal highs above? Right? It's because there are equal lows right here. Okay, I'm never just gonna slap a long fair value gap if we're in between equal highs and equal lows, right? That's a 50-50 setup. Okay, I was confident the draw is here, but you don't know if we're gonna pull back to the equal lows then go up, right? We could go all the way down here then back up for all you know. So that's just another reason why I don't mess with those setups. I have to wait till one of them's taken out. Right, and sometimes you'll kind of be able to guess which one's going to be taken out first once we get to a certain point. So like when I saw this candle start dumping through this, I was like, okay, we're going to take out these obviously first, and then I'll just wait for another long setup, which we got. And Johnny Cash made a nice call out the other day. So we made these equal highs right here. Okay, and I thought we were going to hold this, and I thought we were going to just go right back to the equal highs. Okay, that indeed did not happen. We dumped a ton here. Okay, but if you look closely, we did take out a major liquidity, right? Which this was a market maker buy medal, and we completed it. So here's like a prime example of, okay, you know the draws, you know these equal highs are up here, you know where these are going to be here. But I've seen these new ICT traders who kind of study a little more than me, like about ranges and deviation and stuff. You kind of expect a giant pullback to at least 50% of the range. I think Johnny called that out. I said I think we have the highs. He's like, oh, I think we're gonna pull back to 50% of the range, whatever, which we did. And even though I'm not gonna guess when that's gonna happen, it's kind of a good example of why you don't slap blind longs like this fair value gap even with equal highs above, right? And then you can just see this becomes inverse. And what's so good about this inverse? It's the only one. It's a singular inverse. So again, that's kind of why you just don't slap these. But when you come back up to them and you have low resistance liquidity and you have multiple inverses on these lower time frames, right? You know momentum's going to go up to them now. But like when you're really close to them the first time, sometimes we get like those pullbacks to 50% of the range, and it's why ICT doesn't long right away in premier discount. He waits for us to kind of hit discount, then go back up, and then he longs the premier discount. And that's kind of what I do. I won't take like a long right when we hit like this. I'm not just gonna look for a long right here. That's kind of dumb. But like, if we get a setup where we hit kind of a high, make it relatively equal, come back like an hour later, day later, that's when I'll long and premium or discount. So that's kind of another thing. You can see how price is slowing down here. It's gonna be a speed bump. We don't know which inverse thing to work. This is where you just wait, and you kind of. This is just a good example. This is 50-50. I'm gonna go to bed and I'm gonna wake up and I'm gonna see a million new candles with a whole different setup. Right? Is this setup really obvious? Not really. So what I'm going to do is you go to bed, you wake up, whole new setup. A lot more new candles to work with. Maybe the setup will be a little more obvious. So again, I think there's someone on Twitter who always says wait to the obvious setup. I forget what his name is. But if you're not waiting for an obvious setup, you're gonna have a hard time. I've taken mid setups in the morning. I'm like, oh, I wish I didn't take that. Have you ever taken a setup where you kind of don't know how to read it, but it starts going your way and then ends up failing, and it's like, I feel like that setup wasn't bad, but it wasn't good. And then you see like a super, super, super obvious setup like an hour later, and you're like, oh, why didn't I just take that one and not take the setup where I was like not super sure about? Like, has that ever happened to anyone? Because that's happened to me a lot, and it just makes you realize like, wait till you get the super obvious setup where it's like the siren, the buzzer goes off in your head. It's like, oh my god, this is so obvious. I'm sure that's happened to a lot of you. So you can see we are rejecting this inverse right now. So again, is this really that obvious? Not really. If I come back in high set and see this, I'll be like, I'm not surprised it happened, right? We have inefficiency here. But if I come back in an hour and I see a rejection from this, well, I'll be a lot more confident we're going to go here. So what do? I'll just short a retrace like this. And that's why my win rate's so high. Instead of just guessing right here. So, nice reaction from this so far. So this is where I look for this. So watch. So I bet you if this is inverse, this would be a good short. Right? It's a singular fair value gap. It's a bullish fair value gap. If this is inverse, I bet you it'll be a good short. I'm not gonna short it because it's Sunday night. But like that's like the key thing I look for. I look for a bullish fair value gap. And if I think we're going to go lower, I look for that bullish fair value gap to be inverse right here. So I think I'm going to end it there for now. And that's something you can watch for the rest of the night. I think that'll be interesting to watch. I do want to go over gold real quick. Gold is kind of in the same situation. So I said on Friday I was looking for buys down here. Do reclaimed fair value gap come into play with inverse? A reclaimed fair value gap and an inverse is the same thing plus. You want to see it close back above or below. Is trading SPX in London dead PA or is it tradable? I would only trade yes and NQ in London. Like, so gold, what do you notice about gold? Giant move down. What usually happens, these usually get filled. So literally when we were down here, I said in my Discord, in my private Discord, I said literally I'm looking for buys right here. And we've just gotten a massive move since it happened. So I'm still looking for buys. I want this to be filled. There's nice equal highs up here and then maybe buy side. And we're in a weekly fair value gap, so it would just make sense, you know. But here's how you kind of anticipate this getting inverse before it actually does. It's just a signature and price. I've seen this many times in screen time. This is more of like a screen time setup that you'll see once you watch the price enough, right? You'll see these giant moves and we fill them back. So yeah, I think I'm gonna end it there. This will be recorded. I think my class last Sunday was a little better. I feel like I didn't really have a lot to go over this Sunday. But yeah, okay, so this is getting inverse perfectly. So I'm just gonna take a demo short. Right, my stop will be a close. So my stop will be, I'll average down if I have to, like a close above this. And move my stop to break even right here, and I'm gonna try to target like a little lower. Like I'll try to target down here maybe. So this is just a perfect example of an inverse. So yeah, my buys for the week, I would prefer shorts because we have a giant SMT. You mean the fair value gap that's in the same direction as? You're talking about almost like a Reaper fair value gap. Don't worry about those plus EV. Those are going to overcomplicate it because then you'll reverse your position like 5 times. Again, so I alerted like 5 plays a day last week, every single day, because I was being a degenerate. Like, I literally alerted so much. I was like, all right, I'm buying this inverse, I'm selling this inverse. Like, and most of them weren't super heavy positions, but I alerted like 30 times last week, and I would say it went like 24 out of 30. So pretty good win rate. But like, I'll do that again this week maybe, and I'll post a live stream of me doing it, and I'll just post the clips of me doing it, and you can literally see how I use them and when I buy and when I sell. I had a few misses reliable. The paper trades ones, they're not misses or they're not wins. I don't count those really. You can already see I'm up 7 points here. So if we hit this, I might stay on for like 5 more minutes because I want to see what happens here. As soon as we hit this, I'll move myself to break even. But see how this is just getting violated, and we just look how far we're dumping now. See, look, this is exactly what I was doing last week. I would just, as soon as I sell this, I just market sell it, and I just instant 10 points right here, you know. But yeah, I'm gonna do the same thing next week. I'm gonna upload the streams to YouTube. You'll see all like the entries if you watch the streams. You know, so yeah. This is a little more advanced. I don't want to confuse anyone, but you wouldn't long this inverse mainly because we already hit buy side and we're delivering from a bearish fair value gap. See, like, it's a little more advanced, but we're delivering from a bearish fair value gap. We already hit buy side up here, so it just wouldn't make sense along this. It would maybe make sense along it if we got our entry right here before hitting this fair value gap. But when you see us hit this fair value gap first and then go down, you wouldn't long it. You kind of treat this like buy side as well. So you hit buy side, you don't long this. A little more advanced. I don't want to confuse anyone, but yeah. Let's see if this hits. I move my stop to break even. See, if I took 2 contracts, that'd already probably be one out right here. Nice, Sanic. Alright. Yeah, we can play Metsy. All right, I think I'm gonna get off here. This is Asia, so this might slow down here a little bit. Yeah, a little bit, Menti. Appreciate all you guys coming. Good luck this week. I'll be in training chat. I'll probably do a free stream sometime this week, but yeah, thank you guys for coming on that. Peace out.